good evening or good late afternoon to fellow premium members and like members. I'd like to welcome some new premium members to our family. That is the premium membership of the traderstoolreview.com. And we will be at the closing bell for the week ending November 8, 2013. For those of you who don't know, tomorrow Bill and myself will be doing the Master the Market main course. This will be the last one for the year, and we have almost a full house. Luckily, there were a few more people who did decided to come, and also we have a couple of receipts from our graduates, so that makes up a good number. And we have a lot of things to talk about. For start, reviewing back the closing bell stock market pick that we have for the last 6 to 9 months. That would be very interesting going on. And we are getting up the video up and should be able to get the recording of the last Wednesday, the closing bell picks for 2013, and looking at some of the secrets or some of the methods that we use, why we have done so well. So far, the feedback has been great. We got a lot of users or premium members saying that they find it very amazing how accurate our stock pick has been to move up. Let's see what we some of the stock we looked at last week and see how well they have fared so far. That's one of the things we will be doing. So that will be the discussion for the November 8, 2013. So myself and Bill will be kind of busy until Monday for the 3-day workshop. And then on the 14th, I'll be taking my 2 weeks vacation for that. So take note, there'll be very limited update from 14th of November to month end. As such, your premium membership will be extended for 2 more weeks. That should push you by whatever date that you have there. So I'll just make sure that your investment on the premium membership are well protected. All right, so let's move on. What we have so far, just a little bit of announcement. Now, last week, looking back at my notes for week ending November 1st, 2013, we are pretty much unchanged. Last week it was 1808. Now it's 1806. You can see it here. But who knows, coming to 5 o'clock this evening when the market closed, we might see a sell-off, as we are seeing it also in Singapore, because the Singapore SGX has broken down, almost down by 0.9% in here. I will show you the chart. Hang Seng is down, and this is partly also due to the a better than expected GDP from the US figure, which is at 3.8, which is higher than expectation. So that's what we saw. US Dow Jones is very irony now, seeing that news that is coming out from US that they are recovery, but don't be fooled. To me, and what we think this is not recovery, is just somehow the numbers of the GDP number for the US has been manipulated, and as such, the Wall Street doesn't like this, despite the debut of Twitter, which went up almost 70%. I think you heard about that one from your local TV. But what's very important was that the GDP number that's coming out was very positive, showing that U.S. Economy is indeed recovering. However, that is pointing to stimulus, which is the money printing, the quantitative easing, that the market is so used to addicted, that will be tapered off. So that's why the market doesn't like it. That's why the market sell off 150 points despite rising by 150 points the day before. So that has been the market it is. So market likes money printing. It's addicted to it. Anytime there's any news that showing that the quantitative easing being tapered off, the market is going to sell off. And the consensus among the survey that the QE will be next year, first quarter of 2014, after the nominees, so-called Janet Yellen, been sworn in as the first chair lady of the Federal Reserve on, I believe, 31st of January 2014. So that's going to be in place. But in our opinion, the QE will not be taken out because US is not recovering, and there are many reasons, which is I won't talk about it today. Okay, let's look at what we have so far, 1808. Let's look at the chart we have here. Now, bringing back to the chart in here, what you are seeing so far, let me just highlight it. You are seeing a base building in here, which is what we have here, all right? A nice base building here. So this is a level where we're going to be seeing a lot of tests, a lot of pressure is going to be pushed into here. At the same time, we're going to be having a lot of support. Now, if one of the things I will show you is also the foreign funds flow in Malaysia. All right, so if I push this back to a weekly chart, Okay, and let me just erase the drawing. You could see market is hovering at the 1800 level, and we are seeing tests now. That's very good. So every test that is successful, the market will rise. However, on the flip side, if the test is a failure, means tests cannot be supported at 1800, it will break down, subsequently retest back 1770 over here. So this is a critical point, and we will see the next falling bars next week to see where the market's going. At this junction, it can go both ways. Okay, this junction can go both ways. Looking at the FBM 70, which does measure the small cap to mid cap in here, we are seeing a nice test here at 14,300 level here. Market are quite reluctant to go higher. As such, it is just moving sideways from between 14,300 to 14,350 in there. So it's yet to be seen how the market will fare from then onwards. Okay, all right. So let's move on in here. Okay, so this is the FBM 70 in here. Let's look at the foreign funds now. Not this one. This one we talked about this already. I'll talk more. Now on the foreign funds flow, you will notice the blue color node in here is the daily foreign funds flow. You can see it is pointing downside over the last many